In any gold rush, who gets rich? Is it the prospectors digging for gold, or the guy selling them the shovels? This is the exact question investors are asking right now about the two most anticipated IPOs in the world, Anthropic and Databricks. We are talking about a potential $500 billion showdown. Let's break it down. Anthropic is the gold miner. They're building Claude, a powerful AI model designed to compete directly with ChatGPT. They are searching for that digital gold, the artificial general intelligence that could change everything. On the other side, you have Databricks, the shovel seller. They provide the essential infrastructure, the lakehouse platform where companies store, clean, and prepare their massive datasets. Without clean data, AI is useless. So, before anyone can even think about using an AI like Claude, they need the tools that Databricks sells. Now, here's where it gets interesting for investors, especially when we look at the risks after these companies go public. Let's start with Databricks. They were founded way back in 2013. That means thousands of employees have been holding onto their stock for over a decade. They're itching to cash out, to buy a house, pay for college, or finally retire. So, when that 180-day post-IPO lockup period expires, what do you think is going to happen? A massive wave of selling pressure from employees. It's a predictable flood. For a smart investor, this signals a potential buying opportunity. You wait for that employee sell-off, for the inevitable dip, and then you consider making your move. Anthropic is a completely different story. It's what I call a strategic knot. Anthropic isn't just owned by venture capitalists. Its biggest investors are Amazon and Google. They didn't just throw money at Anthropic for a quick profit. They invested strategically to secure this powerful AI for their cloud platforms, AWS and Google Cloud. They are playing the long game. So, when Anthropic finally IPOs, do you think Amazon and Google will just dump their shares? Probably not. They might hold onto their massive stakes forever to maintain their strategic advantage. This creates a fascinating problem for the public market, a scarcity squeeze. If giants like Google and Amazon are holding, say, 50% of the company and refuse to sell, the amount of stock available for the rest of us, the float, becomes tiny. When you have sky-high demand for a hot AI stock but an incredibly low supply, the price can shoot up to irrational levels. Now, you might be thinking, why not just invest in Nvidia or Microsoft? Well, those aren't pure bets on AI software. Nvidia is a hardware company selling the chips. Microsoft is a massive bundle. You get their AI, but you also get Windows, Office, and Xbox. Databricks and Anthropic are different. They are the first giant pure-play AI software companies hitting the market. For investors who want to bet directly and only on the AI software revolution, these are the cleanest options. This purity will attract a ton of hype, and investors will likely pay huge premiums just to get a piece of the action. So, what's the final verdict? Databricks is the safer bet. It's the essential plumbing for the entire data industry. Even if Databricks doesn't become number one, companies will always need to manage their data. It has a solid, durable business model. Anthropic, on the other hand, is the lottery ticket. It's a high-risk, high-reward play. If Claude actually wins the race and becomes the world's dominant AI, Anthropic won't just be a huge company. It could become a $3 trillion behemoth. But if it loses to OpenAI or another competitor, its value could plummet. So I'll leave you with this question. If you had $1,000 to invest in the AI gold rush, where would you put your money? Would you bet on the company digging for gold, Anthropic, or the one selling the shovels, Databricks? Let me know your choice in the comments below. Thanks for watching, and don't forget to subscribe for more insights.